Stocks offer the potential for higher returns than bonds, but also come with higher risks. Bonds generally offer reliable returns and are better suited for risk-averse investors. So we have stocks and bonds, and then Forex and Commodities. What about gold and silver? And which is the better investment? Who controls your money? And with all the various sorts of investments out there, how do you know which is the right one for you? To discuss on that topic, today joining me, I have Dr. Jothee. Thank you for joining us.
Thank you.
We have Dr. Nizam, and we also have Dr. Rosman. Thank you so much for joining us today, gentlemen.
Okay.
Yes.
Dr. Jothee,
Yeah.
there are just so many investments out there. How do we know which is the right one for us?
For the investors, mainly the main thing is the risk appetite. To what extent they're willing to take the risk of that particular investment. Secondly, how informed they are, whether they are an informed investor or uninformed investor, whether they have got sufficient knowledge about that particular investment class and they can invest. And that's why you make your choice according to your risk appetite plus your informativeness.
Right. Dr. Nizam.
Well, I think Prof. Jothee has mentioned kind of sum up everything. But the way I see it, apart from setting your risk tolerance, is also determining your financial goals. So that would mean you need to establish the right timeline and what sort of asset class that would suit with that timeline. If you're talking about retirement funds, you may need to have a bit more of fixed income securities, perhaps.
Right.
If you, those are the younger ones.
The younger
Private,
ones.
Probably they are in their 20s, 30s, perhaps. Perhaps in terms of asset class, equities would be more preferable. So I think the timeline, the financial goals, also part of the considerations.
Right. I think a lot of us focus only on the risk factor of whether we have a return or not, and we don't know what length of period do we want to keep investing it for. Okay, that is one thing. Yes, Dr. Rosman, your points, please.
Yeah, going through a couple of economic turbulence
Right.
in 1998 and now the pandemic. What I can see is critical is for an investor to have a balanced investment portfolio.
Right.
So one can never be too sure of what is the right investment at any given time. So I think to have a balanced investment portfolio will be critical in order for the investors to remain healthy.
Right. When we say fixed income and the other types that come with it, how do we differentiate, Doctor?
Fixed income is you're sure about getting that particular coupon for a bond, 3 months once or 6 months once.
Right.
You'll be receiving the same money.
Okay.
You are sure of it. But like equities, the income is indefinite and plus it's variable.
Okay.
It may be positive or it may be zero.
Right.
So in that basis, same thing, like when you talk about commodities, commodities again is a different class by itself where you are trying to own some fundamental commodity, not for consumption, but you are just buying it for the sake of investment,
Right.
to resell it. And currencies, for example, is that all these instruments have got a secondary market.
Okay.
And the secondary market determines the price every day. And you look at how you're going to earn, like what Doctor said
Dr.
just now.
Nizam said, yes.
How long?
How long?
What is your tolerance? How long you can park your money there and wait for the returns? But definitely the fundamental idea is high risk, high return.
Right.
And you want to go for get rich quick kind of schemes, it's just a gamble.
It's a gamble.
Is it? Okay, so you have to choose.
So you have to be informed.
Informed, how much
Do your
information you have.
research.
Whether you are an informed investor or you're just taking a gamble.
Okay. If you were to take me, I only know about two: saving it or putting it in a FD. So if I want to be a little bit more adventurous, what should I consider?
Well, obviously, one critical thing that we need to understand is that there's inflation.
Inflation is always there.
Inflation will work as a tax. The worst thing about inflation is like it works like a tax, but it will tax you irrespective whether you are rich or poor. So in that sense, investment kind of compulsory the way I see it. So investment, of course, subject to the kind of returns that you may get, and therefore the next question is, what are the asset class that really suits your benchmark? Take for instance ASB.
Yes.
Their benchmark is FD rates.
Yes.
A lot of critics about this around these issues, but if you look at the nature of ASB, it's kind of hybrid. One is like unit trust, the other one is like FD, and therefore the benchmark is FD. So the point that I want to make is that about investment is also deciding the right kind of benchmarking is also critical. The standard benchmark, I would say, inflation. If you look at EPF also, they also consider inflation to be part of their kind of dividend policy, so to speak, whereby they will take into account the state of the inflation for the past 3 years.
Okay. Stocks and bonds, how can we view it? Is it very risky, or what are the main comparisons that will help us decide?
Well, I guess for private investors, we'll be looking at more stocks as opposed to bond, because it's easy access,
right?
And it's basically there's no barrier to entry as opposed to bonds. So I guess different investors will have different kind of appetite, like what Dr. was saying. Yeah. For private investors, stocks will be more appealing to them. Yeah. Then again, we also be looking at the hybrid kind of investment like ASB, which or basically ASW for that matter for non-booming. So these are basically something different. When we use it to peg against the inflation rate, most of the time will be higher.
Right.
So that's what we'll be looking at.
Yes.
Adding on to that,
yes,
the investor will see what is your real return.
What is your real return?
Real return means that your return minus the inflation factor, like what they said.
Yes.
You minus the inflation factor, what the extra you're getting. Sometimes you can go into investments where you are getting negative real return.
And these are things that people are not aware of.
Not aware of,
Yes.
because your inflation is already there. Whether your investment is earning anything more than inflation, or is it earning something less than inflation. And again, people are not very aware what is the inflation rate right now. And that is variable. It will be changing.
Where can they go to find out?
They can
more
find
on
it out
this?
in central bank statistics and all these things. They report it. From time to time, they report the inflation rate.
Okay. Form of returns, right? How does this vary? And because I know of people who go like, yes, it looks like I'm making profit, but I'm really not getting anything, and it just keeps rolling and rolling and rolling. So does this also come back to the risk appetite and knowing how long to wait for it?
Yeah, I say yes. I mean, each asset class would have a different kind of risk and different kind of volatility. If it's fixed income, typically it gives you a steady kind of returns, but typically also when there is a rising interest rate environment, there you have a situation whereby your bond prices could actually go down because the relationship between interest rates and bond prices, they are inversely related. These are quite technical terms.
A little technical, a little
but
deep. Yes.
Typically these are the concern about the bond market, like what we are experiencing at the moment. We saw a sharp rise in the 10-year yield in the US Treasury markets.
Yes.
Now it's hovering around 1.7%. Earlier on, it was like 0.9%. And there seems to be a market talk, a market chatter, so to speak,
Right.
that the Federal Reserve could, at some point, would want to raise their interest rates. So in this type of market, fixed income may not be that too favorable because we are expecting rates to rise and therefore your bond price to go down. So in this type of environment, people would be focusing more on equities because there was a lot of excitement, a lot of expectation in terms of the earnings going forward. Yeah.
Right. On that note, we will take a break, and when we come back, we will discuss more on Forex and commodities. So stay with me on who controls your money. And we are back on who controls your money. Looking back into Forex and commodities. So Dato, can you give me some vague idea at least on what should I consider if I want to look into Forex and commodities?
Well, Jess, I would like to share my experience way back in the early 90s,
Yes,
when I first started to get into the job industry. Yeah. There's a lot of opportunity, for youngsters back then to make a lot of money from being an agent for Forex, not knowing what we are getting ourselves into. So, and at the same time, nobody really knows how it really works.
Right.
And to my surprise, this trend is coming back. Yeah,
It's
and recently,
resurfacing.
yes, resurfacing. And recently, we've been hearing a lot of issues with regards to Forex. To me, it is very high risk. And if you are not well equipped, with the right knowledge, it's quite easy for us
To burn out.
Yeah, to burn out.
The volatility is...
And it could be a scam.
It could be a scam.
It could be a scam. Whereas commodities is something which is actually more palatable. Yeah. Of course, we can look at agri products, and also we can look at other sort of commodities like gold and silver. And quite recently, gold has been the trending.
It's been the favorite right now.
Yes, that's right. So I guess gold it is a commodity which has been used for years and years, and it has been
that standing
proven.
power.
Yes, yes. So I think if you were to ask me, right, which one would be safer, I would go for
And it's
something
been trending
which has been,
since I think 2020, since the pandemic started.
Yes. Yeah.
Yes.
So I would go to
You would go to gold.
to commodities like gold.
Gold. Okay. Dr. Nizam, commodities trading is usually described as a future contract, right? How does that work?
Well, futures is actually a
How
derivatives.
does those contracts, come about?
I would say it is meant for institutional, and it is used as a part of risk management, whereby there's hedging. It's a hedging mechanism.
Hedging.
To protect the players from the volatility in the markets. So it's a form of risk management, the way I see it. But the thing is, there are speculators in that market.
Right.
There are also arbitrages in that market, trying to take advantage between the spot and also the futures market. So there's also speculators, obviously, to provide liquidity. So in a way, it's a very complex market altogether. So I'm not too sure whether an individual could actually participate in this kind of markets, which is very, very volatile.
Very volatile.
Yeah.
Dr. Jothee, your thoughts on this?
Commodity market, when you say futures is a separate market than the physical market itself.
Okay.
Spot market, you're talking about gold in the spot market, you're talking about today's price.
Right.
When you're talking about futures, you're talking about 3 months or 6 months ahead, contracts basis.
Okay.
So you can deal in futures market only on contract basis, the paperwork, where you don't actually buy or sell the physical item. So actually, like what Dr. Nizam said just now, it is for hedging purpose. If you are really have an exposure in the spot market, and you can go and buy the futures, buy or sell in the futures market, you take an opposite position there. To hedge by, if you are thinking about the price is going to go down, then you short sell there. Short selling is to sell something what you don't own, and then when the price go down, you make money in the futures market, and you offset the loss in the physical market. And this you need to know the technical knowledge, like what Dr. Nizam said, it only can be done by institutionals, but not the individuals.
It pretty much serves as a safety net to a certain extent.
Yes, exactly.
So where you can check and balance
risk
on
risk
either
management, kind of a derivative. No, it's a derivative.
Derivatives.
Coming back to a little bit about the currency.
Yes.
See, when you want to go into Forex, you must have a very good knowledge about how does
Exchanges
the
and how
pair
they
of
work.
currencies moves.
Right.
Because fundamentally, theoretically, we can say that there is what we call it as IRP, interest rate parity,
Yes.
versus purchasing power parity of these two currencies. How many of them will have this knowledge?
Very few.
Very
or
few.
Zero to little.
So once you don't know which interest rates is going to where,
Yes.
and you don't have the knowledge about predictability of the currency, and you are going into it, and
Yes.
you can easily lose.
Some pointers, yes,
certain, some banks they provide DCI, dual currency investment, where you have some forex, currency in your possession, and you can make money from it, but the banks would help you, and the return is almost fixed, and it won't be as volatile, and it won't be as good as other form of investment.
So you still get some at the safety, but because it's being mitigated by a middle person, it's much more lesser, but with also a lesser risk.
With a lesser risk. That means you can lose, but it won't be that much because there's a hedging that being done.
Right.
And your investment will be cut.
So this is most probably suitable for people who are new timers or want to be adventurous and get in.
Precisely.
So they have someone to hold their hand through it. Right. A few pointers from you, Dr.
Well, I'm not so much on FX markets because it's very volatile.
Right.
But like Prof. Jothee said, I think the understanding of because you're talking about the national currencies.
Yes, it's scary to a certain extent, but also very, how do you say it? It's thrilling because you might get a big return.
So you need to be savvy on the state of the economy. Like US economy, you need to understand what are the key indicators that can affect the FX markets. Typically, early of the months, the announcement of job markets statistics like non-farm payroll, the ISM index, which is measurement of business sentiment. These are the key indicators, or even the meeting of the Federal Reserve, the Central Bank of America, could essentially affect the movement of the FX rates. And if you purely trade on the FX market itself, I think without understanding the economics behind it, and
it's diving into a shark tank.
Exactly.
Right. Moving on to another sort of investment which has been around for centuries, gold and silver. Now we're coming to that. So what are your thoughts on gold and silver?
Well, I think it's marvelous. I mean,
it's marvelous. Along other
everybody
like
loves
platinum and
gold.
such.
Yeah, everybody loves gold. Not so much on silver, but then again, from my point of view, I think I would applaud everyone to have gold, in some form or the other. So it is actually can give you a steady income.
Right.
But I don't see it as kind of main investment for private investor.
Right.
Yeah, it's currently when we see a lot of people, withdrawing their EPF to buy golds and whatnot, I think it's temporary in nature. So it's a matter of time when they started to change it to other form of investment.
But Dr. Jothee, when we speak about investing in gold and silver, we're not really referring too much to someone who just goes into a shop and buys it. We are referring to someone who's actually monitoring the selling and buying price in the market.
You have to differentiate between a lady like you go and buy jewelry.
Yes, and an investor.
You're going to consume it. That is different because you're buying it to wear.
Yes.
And you're not going to resell it to make money. But we are talking about the investors in gold is like gold biscuits.
Yes.
Gold chips or maple leaf kind of gold, where you buy and you hold for a while. Actually, you don't buy the gold biscuits at all.
You buy the value.
You're buying only the paper value. And later, if the price goes up, you're just kind of you are just trying to make money out of it by speculating.
Is there much volatility in that market?
You see, there's no market without volatility. You are talking about gold or silver or petroleum or anything also.
Yes.
All the commodities, they have got their own volatility. But again, you must know the market mechanics of it properly. Otherwise, if you think you are going into some commodity exchange or commodity market without much knowledge, you should be able to have the ability to go into hedging in the futures.
Right.
Or go into forward markets or something like that, so that you won't burn your money too much. There is a fundamental there.
Okay, right. Because silver, yes, not too much. But when it comes to consumers, right, like for Indians, we actually have a day called Akshaya Tritiya, where it is a very auspicious day for us to buy gold. So if you were to pass by any of these little Indian shops anywhere around the country, you would see them just selling even gold coins. Because it's so auspicious, people will be flocking to buy gold.
This is a kind of a traditional belief that on the day if you buy gold, you'll be accumulating gold, it will multiply.
Yes. So,
not that gold multiply, but you will have the ability to
Wealth.
buy more wealth.
so
It's
A good
belief.
luck.
it is good luck. But silver, unfortunately, we don't see much on a consumer market. But then again, it is still there.
For industrial use, yeah, all these commodities are for industrial use. It becomes a raw commodity or raw material to produce something else, and it all depends on the demand and supply, and we look at it in the future demand and supply. That's why we have got the futures market for it.
Right.
I have a question to ask, Doctor.
Yes.
What do you think of cryptocurrency being used backed by gold?
Yeah, you see, we are going back to the gold dollar time, the gold standards, where cryptocurrency is a currency which you can peg to anything.
Right.
So crypto has been coming up, and it is not legitimate by the governments wherever they issue that currency, because governments can't issue two currencies at the same time. Crypto has become something like a kind of a de facto kind of a currency. But of course, you can peg it to the gold if you think you can go
Bring it
synchronize
back.
with the gold.
Is it safe?
Oh, we will have
Yeah,
to hold
okay.
on to that point. And it's getting interesting. We'll come back to who really controls your money on further chat on that. Thank you. In conversation, who really controls your money? Dr. Jothee, Dr. Rosman earlier was wondering on how does cryptocurrency tie back into investment?
Now you see, once the crypto is pegged to gold, the entire thing depends on gold price now.
Okay, yes,
Back to like gold standard coins last time.
yes.
Or we had this, what we call it, those days dollars were pegged to gold. So when the gold price go up, your value goes up. The gold price go down, your value go down.
Okay.
So it depends on something else now.
Although we see gold as the number one priority, silver still seems to be making more business on the investor front because there seems to be more demand for silver. Sorry.
Well, silver has got its own market because maybe the industrial use of it.
Right.
Like in India, you see, they have got a lot of use for the cookery pots and all these things by silverware.
Yes.
So there may be a use for it. And even in the other industries, there may be some parts need the raw material as silver.
Right.
So there's a huge production of silver going on. In terms of investment into silver, of course, we don't see it as a famous investment, but there are a category of people who have been quite well versed with the silver investment.
Dr. Nizam, we also see investment when, assuming someone wants to open 10 restaurants on a chain and they're looking for investors, to pump in money for that. How does that work? Is it safe?
Well, I think if you're talking about venture capital,
Yes, venture
private
capital, or
equity,
franchising. Yes.
I mean, in terms of sourcing the funds to
Yes.
finance this venture. So we are talking the kind of risk spectrum which on the high side. I used to work in a employees provident funds, and whereby one of the asset class is actually private equity.
Right.
But the thing is, private equity is highly risk in terms of the returns and the risk profile. So the success rates is quite low to a large degree.
Okay.
So the assessment can be very different in terms of from the investor's point of view. But yes, these are the avenues that can be used by the businesses in terms of sourcing their funds from the venture capital, from the private equity funds. But the risk is definitely on the high side.
It is on the high side. Dato, your thoughts on this sort of
Well,
investments?
I'm one of them who's actually
Yes.
been seeking out for funds
Yes.
for my
Yes, your perspective.
business. Yeah, whatever it is, it has to be regulated. Yeah, in the sense that we are not breaking any rules and regulation in order for us to source funds from the public. It is also important to note that there is such thing as equity crowdfunding. Yeah, so we can you can actually legalize this, and there are certain bodies which are regulated by Securities Commission to basically source for funding from the public for this purpose.
How does this work? It's very interesting, crowdfunding.
Well, the agencies would have to be appointed by
Okay.
the Securities Commission,
Right.
and the investee company would have to present their case to this so-called ECF company.
Sort of pitch.
Yes, pitch it,
Okay.
and then basically they just open it to the public to come in and invest. And the good thing about this is that during the pitching session, this is where you're trying to influence or trying to get the investor to buy in your idea. And the process is simpler as opposed to getting a bank loan or try to raise a bond. And the amount normally would be lesser.
So you have more people investing smaller amounts
Precisely.
to contribute towards the goal.
Precisely.
Okay. Dr. Jothee, your...
But talking about this crowdfunding or even the venture
Yes.
capital, like what Dr. Nizam said,
Dr. Nizam, yes?
the risk is high because it's a new venture.
Okay.
You have not tried its
So
success
it's still on
rate
an
yet.
experimental
And
stage.
definitely when the risk is high, the expectation of the return by the investors also will be high.
Okay.
So whether the cost of capital will be cheap or not, it's another question.
Okay.
Because like you want to go for a bank loan or get a bond to be issued, of course the rating will be very low because you're a venture, So nobody knows your risk in the future.
Okay.
So but when you go for venture capital, of course definitely your cost of capital will be high.
Right.
So whether they can have that kind of income to pay the investors,
Okay.
that is important.
That's all. There are times when I see openings for jobs where I think people are not trained, but they are told to just go and sell stocks or shares or bonds. This was very popular during my time as well. Where you just hire newbies, fresh people to convince people to just share, sell, and it was just about. I think the blanket statement was share market. That's it.
Yep.
That's how you get into. Do you know about that, Dr. Nizam?
Yeah,
What were your thoughts on that?
Well,
Quite
I think
interesting.
the common issues surrounding the unit trust industries, when we talk about share market.
Yes, the reason why I'm asking that is because it was related to a lot of scams and people being misled. So I just wanted to know about that.
Well, that's the thing. That's where education is very important.
Right.
From my observation, at the moment, especially in the social media space, you can see a lot of investment guru cropping up.
And people
Some
are
are legit.
flashing a very, very expensive lifestyle, and
Exactly.
gullible people are falling for
Right.
that.
But there are some who are quite legit.
Probably, yes.
But some of them, they are attached to the institution like Bursa Malaysia.
Right.
Even Bursa Malaysia have their own program in this respect, whereby it provides some education programs to the newbies, so to speak. So I think as a potential investors, the newbies in terms of investment, I think they need to be careful which guru they should go into and be able to ensure that whatever information that they get is the right one. Because there's a lot of scam out there, and the amount of money can be transferred is a lot. So I think the risk of being losing money is there. So I think the critical part is to ensure that this education program or investment group are the legitimate ones.
Okay. Dr. Osman, in your opinion, what would be the best sort to go into for someone with a middle income but who is looking to invest?
You need to be saved at all time. So
Some
if you are
pointers to
not
take.
if you are not sure of what kind of instrument that would be the best, I would say unit trust is the
Unit
best.
trust.
Because it basically hedge all the risk that is involved in all sort of investment, bonds, stock market,
Right.
or so on and so forth. So, but then again, you cannot expect exponential return, like when you're buying one stock and suddenly it fly off, 300% and whatnot. You won't get that kind of return, but you will have a steady return,
Right.
and it is quite safe.
I like to liken what Dr. Rosman said. I think investment is kind of like you are in the agricultural sector,
Right.
meaning you need to seed the crop, you need to put in the right fertilization, the right amount of water, so your plant will grow and eventually will yield some, the yield, so to speak. So it's same principles. It has to be. You need to do your own due diligence.
Okay.
Duty, and then be able to identify the opportunities. And there's a right timeline. If it's, to me, if it's too good to be true, it's because it's not true.
On that note, we'll take a very short break, and when we come back, we will look a bit more into what is unit trust. Stay with me on Who Controls Your Money. And we are back on who controls your money and looking into unit trusts. So Dr. Jothee, can you just enlighten me a little bit more on unit trust?
Unit trust is another instrument of portfolio diversification.
Right.
Because, of course, you can't buy 50,000 stocks. So you contribute a small amount of money to the unit trust company, where they will diversify for you in a larger way.
Okay.
Because they pool all the money into a big funding.
Right.
And they will have a portfolio invested into diversified asset classes.
Okay.
So by that, you will have a lower risk return. But when coming back to the theoretical factor, the lower risk means lower return.
Okay.
The returns will be a bit lower than any other investments, but sure return.
Sure return.
But you have to wait for some time. That's why we say unit trust is quite an illiquid kind of an investment. You want to liquidate it fast, your returns may be
It
very
might
disappointing.
compromise and come down.
It won't give you a target, but if you are young, like
then you have time.
somebody told just now, you are a young investor, then you can wait for until, same like EPF lah. If you leave it there or keep on adding for a long time, then it benefits you.
Right.
But if you are a quick fix kind of person where you want to make money fast,
It's not ideal.
it's not a good idea. In fact, it's not at all a good idea for any investors to go for fast return.
Because for some people, they can, I think all of us are allowed to withdraw a certain amount from our KWSP, our Employee Provident Fund, to invest and is unit trust one of it?
Yep.
Yep.
Yeah, because it is a government's initiative to drive for people to go into unit trust, because it's almost works similar, but I'm sure always EPF is a better return.
The way I see it, unit trust market has been evolving, you know, in terms of geographical asset allocation. There's a lot of options nowadays whereby this unit trust has gone abroad.
Right.
In terms of investment. They go into Asia Pacific, they go into China's market, they go into developed markets such as in the US.
Okay.
They have been delivering quite a respectable kind of returns. So I think at this juncture, the way I see it, if that person wants to invest in unit trust, I think it's a good move because it can offers you a very competitive returns, and at the same time it offers you the kind of diversification that takes into account geographical aspect. And we know that you can see the market movement in S&P 500, NASDAQ, the likes of Facebook, Apple shares.
Yes.
You can indirectly own
indirectly own part of that.
Part of it through unit trust. Yeah.
Right. Dr. Lisa. Sorry, Dr.
I would like to look at different perspective. Yeah, unit trusts are basically very dinosaur kind of
They've been
investment.
around for the longest time.
Yes. So let's look at FinTech, which are basically sexier and it is more appealing to the younger generations. No doubt, it is not proven, tested, but it also provides some sort of belief that you are looking at beyond Malaysia. When you talk about FinTech, it's always borderless.
Yes.
There is no way that you can confine it to certain boss or certain investment. You can go outside of Malaysia and whatnot.
Right.
So let's look at FinTech as an element of trying to invest. Yeah. My only hope is that Malaysia would have its own unicorn company, and to have this unicorn company, you need to develop and you need to nurture. Certain aspect would have to be involved, and I would think there should be a lesser intervention by the government sector. Yeah, because let the risk being taken by the public. Let the public assess it. Yeah, there'll be some mistake, but we're going to learn from it. Yeah, and hopefully we can have the first Malaysia unicorn company. Hopefully.
I'm very curious when you say unicorn company. It's so interesting. Care to elaborate a bit more on that?
Well, of course, unicorn company, like everybody knows, they would be the expert to talk about that. But you're looking at the valuation of a company worth more than $1 billion.
Wow.
Yeah. So, but in Malaysia, I was informed that unicorn company in Malaysia is valued at 1 billion ringgit. So we are still trying to find a company that is developed, yes, locally with that kind of valuation.
Me too. But I care to expand a bit more on unit
Carry
trust,
on.
whereby you mentioned that it's a dinosaur industry. To some degree, it's Yeah, it's been around for the longest time. But I think the approach has evolved. You know, I mean, Dr. Jothee mentioned that the market has been so uncertain, and therefore the way we approach in terms of how we appraise the investment has to be changed. And if you continue to rely on the typical metrics like PE, price to book, discounted cash flows, that's not going to work. I'm not saying those tools are irrelevant. It's relevant.
But we have better tools now.
Exactly. We
Yes.
have artificial intelligence. We have machine learning to do that. So that's why at our end, we team up with Arabes, a company based in London, whereby they provide the expertise in terms of this machine learning. So the investment process is not so much on thematic, but the selling point is more on the process.
Right.
So it eliminates the human biases. So because there's a machine doing in terms of investment decision.
Okay. Dr. Jothee, what do you think about introducing investment as a topic in school?
It's a good idea, but at what level you want to introduce? And
Probably secondary.
secondary school, yes. Last time we all started learning commerce and accounting in secondary school.
Yes.
It worked very well, but investment as per se, it's a good idea to introduce it in the secondary school itself. But the only thing that is they can't go practically to invest yet because their age is a non-contractable kind of age. But it can be taught in theoretical form.
Right.
Until they reach to a higher stage where when they go into the university, it'll be easier for them to capture all this investment analysis and all these kind of subjects will be easy for them.
Yes.
Actually, there are institutions to sponsor such kind of drive now in Malaysia, but we should implement it as soon as possible.
If I can add it to it.
Please.
I saw, because I'm an economist, so
Yes.
we look at central bank most of the time. So when I browsed through Bank of England website, I saw one section whereby the kindergarten school can actually invite the BOE officials to explain how the monetary policy works. So that really amazed me.
So how do you take that and put it into small minds?
Exactly. So
Break
I think
it
that goes
down.
along the way with what we are discussing just now. Putting investment as a subject in the school. I think it's high time that we need to inculcate.
So we're looking at investment as millions and billions.
Maybe for a start, we should be looking at entrepreneurship. So that would be one subject, to begin with. And from there on, then we inculcate the investment part that comes after it. So then it will be more meaningful, as opposed to being it so academia, right? Where you have, okay, this is what stock is. It's going to be very difficult for students, especially at a younger age, to really understand. I know that my dad received this, CDS statement and everything, but it won't mean anything. But if they start from entrepreneurship, they would know that, okay, this is a company and this company can grow and they implement it, right? And then maybe they can do a role play where, okay, assuming that some sort of investment will come in, and they can actually reverse the role that they can actually become the investor and invest in a good company.
Right. I think Monopoly would have taught us all very well on
Monopoly.
that.
But
Monopoly,
you didn't
yes.
link it
growing
to
up.
investment at that time.
Yes. Now that we know who controls our money, very briefly, in a word, what should we look out for, Dr. Jothee? What would you say?
Investments, I would advise the public not to trust quick buck.
Okay.
Don't go for fast returns. Reasonable return is okay, because when it's a fast return, it's definitely high risk. Because the people who come and entice you to go into this kind of investments would not talk about the risk, you will be talking about returns only.
I think the key word is entice you, right?
Yeah.
Yes.
Entice you with returns. They will actually
Downplay
blanket
the
off
risk
the
part.
risk part of it, saying that sure you will get so much. And we are so much into it for receiving the money, which you may feel disappointed later. So go for like what we were discussing, like mutual assets or mutual funds. These
Safer
kind of
ones.
things are safer. Go for bonds, which has got fixed income. Risk is lower than shares, but shares are for the people who are a bit more exciting to see,
Adventurous.
adventurous to get my money fast. So I would say that these all are good, but be aware of
research.
scammers.
Right.
because a lot of scamming is happening in a camouflaged way.
Understood. Got the point. So, Dr. Nizam, in your words, what can we take away?
Well, I think before we can talk about investment, I think one need to save. So in order to save, one need to have a proper personal finances planning. I mean, we need to stick to our own budget. So we need to take care of that first before we can start investing. So those are the prerequisites.
Understand where you're coming from. Okay. Dato'.
I would like to see more emphasis being put on equity crowdfunding. So let the risk being pushed to the public. Let public assess the risk themselves and take the chance. I know that it's a big task, and when there's something goes wrong, then the public would blame the regulators, for not taking stern rules and regulation. But then again, let us have the learning process. Yeah, eventually we can become a matured investment community, and we know where to put our money.
Thank you so much, Dr. Jothee, Dr. Nizam, and
Yes.
Dato' Rosman for joining me today. And there you have it, viewers, the insight on investment. So do your research and see what works for you. And this is me signing off, Jaswin Daman, on Who Controls Your Money.